Welcome to the Craig Brock Real Estate Show, helping you navigate through all the challenges and pitfalls related to real estate. Craig is San Diego's real estate investment strategist. And now, here's Craig Brock.
Have you seen what happened to mortgage rates? Have you seen what happened to interest rates in general? We have the S&P 500 at a new all-time high, and the yield on the 10-year Treasury has hit the floor. 2.42% this morning. That is terrific if you're looking to purchase a home. Or is it? There's also news out from the National Association of Realtors. I was reading a report by Diana Olick, and some of the commentary actually surprised me. The warmer weather apparently hasn't done much to increase the pending home sales. The pending home sales are up just 0.4% in April. That misses expectations here this morning. The warmer weather and higher expectations failed to cause a meaningful surge in home sales. Well, that's why we're going to bring in Terry Lewis here momentarily with Seller Finance Consultants, because you need him. You need to know who he is and what he can do for you. Signed contracts to buy existing homes increased just 0.4% in April, according to the monthly report by the National Association of Realtors. Now, this is NAR. The expectations had been for at least a 2% gain. The Realtors' so-called pending home sales index is now 9.2% lower than April 2013. So maybe all you hear about real estate isn't necessarily true. Sure, there's a lot of pent-up demand in the Southland for homes that are priced under $600,000. It's extremely competitive out there. The 1% are out buying. That's correct. They're buying real estate. They're able to get financing. They're able to pay cash. But what about everyone else? What if you're self-employed? What if you've had a recent bankruptcy or foreclosure or short sale or even a loan modification? The banks don't make it fair. The banks look at a loan modification as a bankruptcy in many cases. Now, just this morning, one of our colleagues here in Southern California, Bank of California, is actually transferring from the NASDAQ over to the New York Stock Exchange. One would think that's exciting. Well, I don't think it's exciting necessarily for them. I think it's an opportunity maybe to take in some more institutional money that they wouldn't have been able to gather otherwise. But this is an institution that I haven't seen write a mortgage in quite some time. They just don't seem to be interested in helping people get into homes or to refinance the homes that they already have. But that isn't the case with Terry Lewis. Terry Lewis has an altogether different strategy. Now, he's licensed. He actually has to be licensed as well with the NMLS, just like we have to be licensed here at Rancho Financial, part of the Skyline Financial Network out of Calabasas. So everything is done to the law, to the code, as it has to be done with the seller financing. But this is the new shift in home mortgage financing. Good morning, Terry. Thanks for joining us here on this Bloomberg network.
Good morning, Craig. It's good to be here today. Thank you for having me.
Oh, absolutely. Well, this pending home sales report leaves a lot to be desired. One would not expect this with the low of the year for interest rates. Like I mentioned at the top of the broadcast, 10-year Treasury 2.42%. We see it here ticking up to 2.43. But you look at these yields, they've just been compressed. Even with stocks on a tear, even with stocks going up every day, this is counterintuitive. We typically don't see this, but as what's happening, it all comes down to supply and demand, Terry. The scenarios that we have investors, institutional investors that have an appetite for bonds. There's not enough issuance of new bonds by the government. When you have this constraint and when you have this supply and demand and more demand right now for bonds than there are supply, is what happens. That drives the value up. Whenever you have an undersupply of something and you have investors buying it, it's very simple economics. The price is going to go up. When the price of bonds goes up, the yield actually falls. But look at this, Terry. It's not doing anything to help home sales. What do you have to say about this? Is there any hope for people that are in their 30s that are strapped with student loan debt that want to get into a home?
Yeah. Well, the problem with the bond market is, there's a lot of money sitting in 401ks and retirement plans chasing any kind of a yield. And, 2% is becoming the norm now, or 2.4 or whatever. So you have everybody looking for alternatives, and we have one with seller financing. People that own their homes, they can carry the loan and sell their home and get what banks are getting. They can be the bank for selling their home, and they can get a 5 or 6 or 7% interest rate on their loan that they carry to a buyer. And we help in that. We're licensed with the NMLS. We're a licensed real estate broker. Our brokerage is with Keller Williams, and we help from A to Z through the whole process and help the seller obtain their goals, and also the buyer who where really the problem in the industry is being able to obtain a loan and qualify under the bank standards and under the Dodd-Frank standards that were implemented in January of this year, that have put a stop on the market. It has nothing to do with how low the rates can get. They can be at 1%, and you're still not going to get a loan if you don't have the right qualifications, if you don't fit into the box of Fannie Mae and Freddie Mac. So the rates are one thing, but fitting into the box is another thing. And I'd say at least a third to a half of America that wants to buy a house can't fit into that box.
Boy, Terry, I think I'm going to have to go out to a Tony Robbins seminar this afternoon just so I can get cheered up. This just doesn't sound good with the ideology of the banks. They're making it so tough because they want to see all your financials, and that's fine. That only takes a few minutes to gather up your W-2s and your tax returns and some pay stubs, yada, yada. But the problem is that if you have your own business and you have write-offs and you have that Schedule C, you might take too many deductions to where even when that depreciation is added back in for that business equipment that you purchased, which may be a Cadillac Escalade or might be some pickup trucks, or who knows, it could be a lot of different things. It could be some machinery. Even when that depreciation is added back in, a lot of self-employed borrowers don't qualify for a mortgage. And let's face it, a lot of people that have terrific jobs with the fire department or the police department or Qualcomm or CareFusion or any place else for that matter that have had a short sale under their belt within the last year, if they can't show that 20% decline in income to be able to justify the short sale to the bank, they don't seem to have a place to return to the market. But seller finance consultants can actually help borrowers like that. Now, your interest rate's going to be a little bit more than 4%. Let's be fair about this. We're seeing the interest rates pull back on VA financing below 3.75%, but I don't think it's going to make any difference if you don't have the proper documentation and the bank's not going to buy you. You need an alternative strategy. This alternative strategy could be for 5 years, 10 years, 30 years, or it could be for as low as 6 months. Am I correct with that?
Yeah, it's what the buyer and the seller agree to. And one thing I have to say is the inventory for homes that are for sale, in the last month, they've gone from, in San Diego County, which I follow pretty closely, 6,000 active listings, up to over 7,200 active listings. So we have a shift happening right now where we have homes for sale rising. It's still a very low inventory, but it's rising very rapidly, and you have a few more sales, but the buyers are on the sidelines, and it's not from a lack of wanting to own a home, it's from a lack of qualifying. And as soon as the sellers who really are in control of the situation here get a little bit creative and say, you know what, I own my home free and clear. Why don't I carry this loan for, or be the bank for a buyer, and open up my possibilities to a buyer, uh, you know, uh, a third more buyers that could potentially qualify under common sense guidelines, not under Fannie Mae, Freddie Mac guidelines that have been so closed down that very few people qualify for them. So common sense is the rule of the day, and you can get a higher price as a seller if you're going to be the bank and actually accept the terms the qualifications that the buyer are presenting to the seller.
Well, let's face it, common sense isn't a phrase that we typically hear at a bank. If you have a few $100,000 on deposit at the bank, if you have your CD or maybe your retirement account pledged at a particular bank that offers that, yeah, maybe they'll use some common sense. That maybe they'll give you a little bit of relief if you've had some credit things, some derogatory credit. But let's face it, Fannie Mae, Freddie Mac, the guidelines are the guidelines. So you have to pass through the algorithm that they have set up, the electronic DU system, and that's a system that every mortgage bank uses. We have some underwriters that actually underwrite many of our loans, but let's face it, when they're doing a manual underwrite, they want to make sure that there's some compensating factors there, that you have some cash, that you have some reserves in case something happens to your employment. This morning, we're listening to Terry Lewis with Seller Finance Consultants on Financial News and Talk, part of the Bloomberg Network here. I'm Craig Brock. This is the Craig Brock Real Estate Program. You can reach me easily enough on the web. I'm the only Craig Brock in America in the mortgage business. You can find me at craigbrockmortgage.com. Terry Lewis, who can help you get into a home of your own without having to use the bank, can be reached quite easily. Sellerfinanceconsultants.com is his website, and I know he'll give you his telephone number in just a moment. We're seeing investors move money into the S&P 500. They're also moving money into bonds. That's why we come into the office this morning and we have a 10-year Treasury yield that's down to 2.43%. I know that our office will be quite busy today. We'll be adding additional staff to handle the calls that will be coming in over the next week because mortgage rates hit the year low. So that's fantastic news if you have a job and if you have a credit score that's over 600, because you can get a loan from a bank. If you're a veteran and your credit score is down to 580, don't fear, you can still get a loan. The VA is a little bit more lenient. They're more liberal. If you've had derogatory credit, even if you've had a recent short sale, you can get approved for a VA loan. VA financing typically allows you to get into a home without making a down payment whatsoever. Now, there is some closing cost, but we have a fantastic scenario for that. You actually have your lender cover the closing cost with a yield spread premium. If you're looking to get into a home with VA financing and your lender isn't talking about that, I suggest you find a different lender. I want to get back to Terry Lewis, who can show you a way to get into a home. Now, you might be thinking, what about these properties that Terry's talking about? Are they way out in the hills? Are they in Ramona and Julian and other areas further out, Moreno Valley? Well, sure, they're all over the place, but potentially this can be used for any property that's for sale. And I know, Terry, you had an interesting conversation yesterday with a hedge fund. The hedge funds aren't necessarily putting their money in the technology right now. One would think that they're putting it into these different companies, Nest and Beats and all these different ones, but they're actually looking at real estate, and they're having a hard time finding real estate investments that meet their criteria just because of the fact that we have seen foreclosures at an all-time low, at least at a multi-year low. We'll get more into that in another program. I'll tell you about what's happening in Oceanside in particular. But Terry, this situation with being able to get into a home could be potentially any home. Can you tell us what happened with this hedge fund that you spoke to?
Well, we met with some people, financial managers, yesterday, and they're managing over billions of dollars worth of assets, and basically we can do seller financing on any property as long as the seller is carrying the loan. But actually, if they need to have their cash out, they can a third party can buy the loan at the closing. And so these hedge funds or these financial planners are looking for yield. The foreclosures are gone. The short sales, the courthouse steps, all that stuff is gone and going away. So they're seeing that there's a void happening with owner occupied home loans, where the banks and the regulations are so strict that it's creating a void in the marketplace, where your average homeowner or your average American that wants to buy a house, it's not the one percenters. and it's not the really low end, but it's it's just the middle America where they can't get a loan and they can't qualify. So they're coming in and they're saying, you know what? If we can get a yield that fits our portfolio, we'll actually buy that loan at the closing table, and that opens up the whole real estate market to pretty much any home that's for sale, as long as
Okay.
the owner can carry the loan.
Okay, I want to quantify what that could look like for listeners here in San Diego. Let's say that you have a $500,000 home and you wish to sell it. Sure, you can call up Berkshire Hathaway and they can put the home on the market, and you go through the process of broker caravans and open houses and everything else. That's a traditional way. Maybe they'll advertise it on the internet, Zillow, Trulia, who knows. But weeks go by, maybe months go by, and then you finally get an offer. Your home sells. And the scenarios that a $500,000 property, even if you hold out and you get your asking price, you're probably going to clear about $460,000 on this property, because you're going to have to pay commissions. You add the normal 6% commission, and then you have the fees that you're going to pay to escrow to sell the property. So let's figure somewhere around 460. You could actually sell your home today for more than that, for more than the 460. You could get a bid today, this afternoon, if you call Terry Lewis, because he could come in and buy the property potentially at, say, 475. Terry, correct me if I'm wrong, but you could definitely sell it for more. And then is what happens. You actually carry back the financing for the new buyer. The new buyer doesn't have to use a bank, and all they have to have is 10% down.
Yeah, exactly. It's very, very simple, and then the bank will buy the loan from the seller at the close of escrow, and you can actually, that $500,000 house you could probably sell for about 530 to 550, because what you've done is you've taken the other five homes that are for sale for 500 on that street, and you've actually made your home more valuable, because another 30% of the buyer pool can actually buy your home that can't buy the other four, and so that creates a demand for just your house, and then you can end up netting the same amount of money with an increased price, and selling off the note to an investor, and it's a win-win for everybody, because that buyer in another year or two, maybe their credit will be in better shape or fixed, and they can refinance into that low interest rate loan, but they got into the house today versus waiting for 2 years.
Well, let's face it, Terry, things are about as good as I've seen it in the real estate market since I've been doing this for 27 years. The market has been terrific, although this pending home sales report that was released this morning shows that there is a change in the marketplace. Just to recap on that, we have pending home sales that were released this morning from the National Association of Realtors. Signed contracts to buy existing home sales increased just 0.4% in April, below the expectation of 2%. The pending home sales index is now 9.2% lower than it was April of 2013. So certainly we're seeing change in the market, but things are quite active here. But this is going to be the wave, Terry, from what I can tell, because you indicated that inventory is up. Sounds like inventory is up about 20% here in Southern California, which is a pretty good increase. We'll see what CoreLogic and some of the other indicators show. These are numbers that we're using on the fly out of the MLS, and it's not scientific by any means. Heck, even CoreLogic and First American, their numbers aren't very scientific either, because they take these micro markets and attempt to gauge what the inventory increase or decrease might be in a particular market. That's a different conversation altogether. I do want to get out your contact information for listeners that might have just tuned in that are thinking, oh, I can sell my home for more than it might be potentially worth if I take advantage of arbitrage. This is a lot of esoteric thinking for this time in the morning. You have a great website set up, sellerfinanceconsultants.com, and listeners can also phone you. We want to get your phone number out, Terry.
Yeah, so our phone number is 619-786-5550, and it's sellerfinanceconsultants.com. you can reach us either on the phone or on the internet. And we'd love to just run by scenarios for people. I'm very good at solving problems, especially when it comes to creativity. So I'm open for conversations on people's issues and what their problems are and how we can solve them with a win-win situation.
Well, there's a seller over in the La Jolla, Muirlands area, and it seems like I get an email every couple of days. He has this home that he's been trying to sell for a lot of years. That's right, I said years. And he has one of these old Chase loans on the property, and he's gone through modification after modification. And the fact is, the property is only worth about what the encumbrance is. I believe he could benefit from this strategy because this isn't a strategy that would be limited to an entry-level property of say $400,000 or $500,000. This is a strategy that could literally be used for any value property. I mean, you could have a house that's out in 29 Palms, it's valued at $30,000, and use this strategy. You could use this strategy on a $3 million house as well, correct?
Yeah, actually, the MLS as of yesterday has I think 242 listings that are offering seller financing, and they range from Rancho Santa Fe all the way down to mobile homes. And so you have an increase in people understanding that this is a strategy that works. Um, so and it's increasing, and you can see it in the listings. And San Diego County is the only place right now that you can search for these seller financing homes. A lot of the agents and or the systems in Riverside, San Bernardino, Orange County don't have that search parameter, so you have to look for them other ways, and it's not they're not up to the times yet. But I feel like that it's a matter of time before they catch on.
It's a matter of time before the technology is implemented, making it easier to find these properties. You have to do a little bit of digging in the Southland. Well, we just have a couple of minutes left here, Terry. We do appreciate your contribution on Financial News and Talk, showing a better way to get into a home if you have had a previous short sale or foreclosure or bankruptcy. And let's face it, you were mentioning earlier about how tough the banks make it. If you're moving money from Japan, if you have a family member that's trying to help you out get into a home, you might find it's not easy unless that cash is properly documented. So if you are moving money from Japan, I don't want to be saying you should be smuggling money or laundering money, but there's a procedure that you have to follow if you have family helping you. When it comes to seller finance properties, you cut out the banks, you cut out the red tape. Jerry, things are just a lot different. If you have a property that's underwater and you're thinking, I don't want to short sell my property, I've been turned down for a loan modification. And let's face it, a lot of people that have short sold their property are regretting it because they find out that it comes back to bite them. They need to contact your office because you can run some numbers in just a matter of minutes and you can show them what they might expect. Want to get your contact number out again, sir?
Yes, so it's sellerfinanceconsultants.com, and our phone number is 619 786 5550. And yeah, the foreign national program we're doing is tremendous. There's a lot of money from all over the world that wants to just come in and park their money in America. That's a stable environment for their money to just have it and know that it's going to be safe.
That's fantastic. Well, thanks for your sage advice. We do appreciate that. Terry Lewis, Seller Finance Consultants. I'm Craig Brock. We got a rally underway here on the bond market. 2.41% on the 10-year Treasury. Wow. What a pullback in mortgage rates. What a pullback in interest rates, global rates in general. Check us out, CraigBrockMortgage.com. Have a fantastic day.